Hey, what's going on, guys? What's going on? I hope you guys are having a wonderful day. Welcome to the Black Financial Channel. My name is Dr. Boyce Watkins. I want to talk to you guys about some information I just read about that might be pretty harmful to your stocks. So, if you are a person that is seeking to make money in the stock market, you may want to hear what I have to say because it could affect what happens over 2023 and beyond. So, get comfortable, buckle up a seatbelt. We're going to get started on the Black Financial Channel right now. Welcome to the Black Financial Channel. That's theblackfinancialchannel.com. My name is Dr. Boyce Watkins. I'm your friendly neighborhood finance professor. On the Black Financial Channel, we talk about Black wealth and Black economics every single day, sometimes as much as 10 times a day. Under the B1 philosophy, B1 means we are Black first. That doesn't mean we hate anybody. It just means we love our people. If you love Black people and you want us to be the most economically intelligent group of people on the planet, put a B1 in the chat. If you believe in the power of Blackness, put a B1 in the chat. All right, so how many of you watched the Super Bowl? Anybody watch the Super Bowl? Super Bowl just went off. I decided I wanted to come out and talk to you guys right after the Super Bowl because I had some financial stuff I wanted to talk to you about as we get started with this week. Congratulations to the Kansas City Chiefs. They played a tough game. They really, I'll admit, I put my money on the Eagles. I really did. I'm not going to lie. But I got a lot of friends in Philly. I got a lot of friends in Kansas City. And so congratulations to the Chiefs Nation because they really, really, really earned it. And I was really impressed. In fact, Andy Reid, the coach of the Chiefs, used to coach the Eagles. He coached the Eagles for 14 years and they fired him. So, you know what? Some of y'all might be, looking at a tough situation where you might get fired. Maybe you'll get fired from your job. Maybe you're getting fired from your relationship. Maybe you're getting fired from something else. But just know that your setback is a setup for a comeback. And you may come back like Andy Reid, because I'm sure the Eagles are wishing that they had not fired Andy Reid right now. Give me an amen in the chat if you know what I'm talking about. All right. So let me jump in and ask you all, how many of you are invested in the stock market? How many of you are paying attention to the market? I keep talking to you guys a lot. You know, I've been doing finance research for almost 30 years now at different universities. I was on the faculty of Syracuse for a long time. That's where my research background comes from. In case you don't know, let me just tell you this, just a reminder, stock market participation is incredibly important for your wealth. It is very difficult in America to get wealthy without participating in the stock market. So you got to do it. You got to do it. In fact, I just read a study recently that said that college graduates' wages are dropping. Did y'all know this? Give me a yes if you knew this or not. But college graduates' wages are actually dropping to the point where I think that they dropped more last year than they've dropped in 20 years. Did y'all know that? That literally, if you are a college graduate, on average, your wages dropped about 7% last year, which is crazy because you had 8% inflation. So you had to make an 8% increase in pay just to keep up with inflation. Just to keep up with inflation. If you didn't get an 8% raise, you're not even keeping up with the cost of living. But not only did they not keep up with inflation, they actually dropped 7%, which is like a 15% gap. And so what they're finding actually is that while college degrees are still valuable, I'm a college professor. My wife is a college professor. We believe deeply in college. Our kids are going to college. So don't think this is nothing to hate on college right now. But as much as valuable as college can be, what people are looking for are skills and experience. So I talked to a young brother. I'm in flight training right now. I'm learning how to become an airplane pilot. I'm very serious about it. And I saw a young brother that was about 19 years old that was in there, and he was training too. And he said he finished high school. I said, "You going to college?" He said, "No, I'm not going to college." I said, "So what are you up to?" He said, "Well, I'm working a job. I'm going to get my pilot's license, and then I'm going to go into the academy program or the cadet program with American Airlines." I said, "You're going to probably be better off than most college graduates because you know what you want to do. You're going to have a specific skill, and somebody's going to hire you based on that skill. So don't worry about not going to college. Just make sure you're prepared. Make sure you have knowledge and skill." College is one great way to get it, but that's not the only way. So just tell that to your kids. Make sure your kids understand that skills are what matter, not just a piece of paper. I was at Syracuse University. We gave out a lot of pieces of paper, and those pieces of paper didn't mean anything if you did not have a skill to go with that paper. Do you get what I'm saying? Give me a yes in the chat if you know what I'm saying. Also, please hit the thumbs up button. Thumbs up, share, subscribe if you haven't done it yet. And I have to remind you guys, I have a new book out. If you want to go take a look, it's called The 10 Commandments of Black Economic Power. It's all on my website at boycewatkins.com if you'd like to take a look. I'm going to do a book tour this spring and do some trainings on it. So feel free to to join us in the spring. I'll let you guys know what cities there are very soon. All right. So here's what I saw that is something you should pay attention to if you're a stock market investor. There was an analyst at Morgan Stanley. I believe his name was Mike Wilson. I could have it wrong, but he said something that was really interesting. He said that there's this indicator they use to predict stock market performance, and that is forward earnings expectations of major corporations. And one of the things that he said is that only four times that this indicator has only been negative four times in the last 20 years. And that was 2001, 2008, 2015, and 2020. And he said in every single case that forward earnings expectations were negative, the stock market went into a bear market. The stock market went down. So Mike Wilson at Morgan Stanley was basically saying that, you know, what we've had already is not the end of it. There's still more of a decline coming, because once companies start giving earnings guidance and earnings expectations, they're going to actually start giving negative numbers. Facebook has had negative earnings or negative earnings growth for, I think, a quarter or two. Facebook's getting their butt kicked right now because they are having trouble dealing with the fact that Apple is basically cop blocking their money. Apple's basically like set up their whole system to say, we're not going to let you track our customers' data, so you're going to have to get it somewhere else. And that has made Facebook's ad revenue kind of jumpy a little bit, because companies not getting the results they used to get. Well, what's happening now is a lot of corporations are now doing their ads on Amazon and Google. Google has an advantage because Google has a phone. Google is trying to sell their Pixel phone, and you saw they had a Super Bowl ad for their Pixel phone because they're trying to compete with Apple. So because they know that if they sell enough phones, they can control customer data and get more of their advertising in front of customers. So ultimately, I was joking. I said to my son, I said, you know, I don't know what their plan is, but I wonder why they don't just give their phones away for like $400 or something. Like I would literally flood the market with Google phones so that I could basically have, you know, that way to connect with the customers in a meaningful way. But long story short, the belief of this guy, Mike Wilson at Morgan Stanley, is that businesses are going to start reporting negative earnings growth. That's what's going to happen. And as they start reporting that, you're going to see more and more of a stock downturn. Eventually, some big company is going to give a bad forecast, and it's going to pull the market down further. It's not the end, though. If you look at the long-term trend of the stock market, what goes down has always come back up. Not every single stock, but the index itself. So it would be more like a temporary inconvenience for those of you that are invested, but you should be aware of that. Now, if you want to know how most of the analysts are sort of assessing things, there are some who are very optimistic. There's a guy named Tom Lee at Fundstrat who leans on the optimistic side. He's predicting that the S&P and that the Dow is going to go up, that we're going to, I think right now the S&P is about 4,000. He predicts it's going to be 4,750 by the end of the year. But Tom Lee tends to be overly optimistic. He tends to downplay the things that could actually pull the market down. The biggest factors that investors are reacting to for the most part are big macro issues like, China reopening, Fed policy, whether the Fed is going to keep increasing interest rates and keep them high or stop their increase. Inflation, how's inflation doing? Let me just tell you this, all those variables are pointing positive. China reopened. They got rid of the stupid zero COVID policy. The Fed is starting to slow down its rate hikes, and they're doing it pretty well in a way where they're getting what is called a soft landing. They're not getting the economic crash that everybody's predicting. Anybody remember a year ago when everybody was saying, oh, recession? Anybody remember that? Where recession, stock market crash, recession, we're going to have a recession, right? Well, where's the recession? Where's the recession? Unemployment is lower than it's been in like 30 or 40 years or something crazy like that. Where's the recession? Ain't no recession. Jobs are readily available everywhere, right? So ultimately what's going on is they're saying, oh, this is nice, right? We've increased interest rates. We thought that it would kill the economy. It didn't. It's like you have a patient that has cancer. You give them lots of chemotherapy and you're like, well, the chemo is going to do this and it's going to cause these problems and these side effects and these side effects. And imagine if somebody gets the chemo and they're like, I feel great. Give me more chemo. I feel awesome, right? That's kind of a surprise. So, but what you're also looking for is for the other shoe to drop. You're like, most people don't react to chemo in that way. We're going to kind of sit back and wait and see what happens. So they're kind of waiting and seeing. Nobody really knows exactly how the Fed rate hikes are going to affect the economy. When the interest rates go up, that tends to push down economic activity. It tends to be a deflator. It's like pulling the air out of your tires if you're going down the road. So it's still yet to be determined. Now, one of the things that I believe is that in general, you're probably not going to see a lot of growth in your stocks this year. You're not going to see some massive market rally, most likely. You could see that if people start to come in and get in, a risk-taking behavior and kind of pop back in. You're seeing some elements of that maybe in crypto and stuff like that. But really, generally speaking, some of the ways I've been making money is doing things like selling options on the stocks that I have, because that generates income while you're waiting for your stocks to finally go up. And also, I've been acquiring stocks. Every time things go down, I just buy more with whatever extra money that I have. Some people go shopping for Jordans. I go shopping for Nike stock. Some people go shopping for new iPhones. I go shopping for more Apple stock. Some people go on Amazon and buy new products. I tend to go buy me some more Amazon stock. And in fact, actually, if you bought I think somebody's mentioned that if you bought an iPhone or not an iPhone, an iPod in the year 2000, it would cost you $300 or $400. But if you put that same amount of money in Apple stock, it would be worth some ungodly amount of money, like tens of thousands, over $100,000 or something like that. So really make sure you incorporate investing into your economic future. That way you'll have a good future. Okay, guys. So do me a favor, hit the thumbs up button, thumbs up, thumbs up, thumbs up, share, subscribe. What I'll do is I'll actually grab one of the stocks in our stock market investing class. I have something called What Dr. Boyce is Buying, where I give the students stocks that I like each week. So I'm going to grab a stock that you guys have. So stick around for 1 minute. I'm going to pull one up real quick. While I do that, if you could, please hit the thumbs up button, thumbs up, share, subscribe. Also, you can go to Spotify and find this podcast on Spotify. Just look up the Dr. Boyce Breakdown. And I'm doing my podcast now. I'll come out in a minute. And so anyway, my wife is outside banging on the door. And so she doesn't understand, like when I'm talking to my people, I can't be talking to you, lady. I got to focus because she's so, these pretty girls come around. They just trying to distract you and stuff. She ain't going to distract me today. No, ma'am. So anyway, let me dig up this stock here real quick. All right. And by the way, if you go to BoyceWatkins.com, I have a training there called How to Make Money Without Working. You might I think you're going to like it. A lot of people do. So feel free to go to BoyceWatkins.com and take a look. So here is a stock that I like right now that I just bought shares in. That company would be Uber. I like Uber right now. I want to buy. In fact, I'm going to buy some Uber tomorrow. I like Uber. So there's my stock for the day. So I hope that helps you. So just know that if the stock goes down, we're going down together. But I don't believe Uber is going to go down. I think Uber is going to keep making major moves. And also, given that the market took a little bit of a dip this week, let me see. I can't remember what Uber did. I think Uber stock actually went down a little bit this week, which means that it could be a buying opportunity. There we go. Went down 4% yesterday. So last week, though, it went about 2%. Last month, it's gone up about 16%. I believe it still has more upside. If you look at Uber over the last year, it's gone down about 1%. Now it's actually gone down over the last 5 years. But at the same time, though, I think Uber is a good long-term investment. And also, if you're into selling stock options, stuff like that, it's a good stock to sell options on to generate income. If you'd like to learn more about that type of stuff, feel free to go to my website. It's BoyceWatkins.com. And also, last but not least, if you want to teach your kids about investing, feel free to check out one of our financial workbooks for kids. You can go to financialworkbooks.com. That's financialworkbooks.com. We have workbooks on investing and everything else that can help you educate your kids on economics. Believe me, if you educate them properly, they're going to end up becoming wealthy. I was just talking to my friend the other day, or today actually. His name is Willie D. He's from the Ghetto Boys. And Willie and I are good buddies. Willie was in my wedding. He's a very smart guy, and he's a great leader of his family. And we were talking about the fact that Willie's daughter is an attorney and his son is in business. And he also, they also are big investors. And I said, you're doing everything right. You're doing everything in terms of building the legacy that you need. Your kids are an amazing asset. So I encourage you to consider how much you're investing in your children. You can't just invest in you. You got to invest in the people around you. That's what makes your team better. Remember, Michael Jordan never won a championship by himself. He had to invest in other players. He had to invest in the organization. He had to make some sacrifices that allowed him to make his teammates better. And that's how he became a winner. So make your teammates better. That's how you win. And that's some of the stuff that I talk about in my book. It's called The 10 Commandments of Black Economic Power. You can find it either at my website, BoyceWatkins.com, or you can get it on Amazon. So feel free to do that. And one of you were asking about how do you advertise on the platform? Just go to drboycefinance.com, drboycefinance.com. I give you a Dr. Boyce shout out on the platform. So if you have a Black owned business and you like to market here, feel free to go to drboycefinance.com. All right, guys, I'm out of here. Have a good day. I'm going to see what my wife wants. So it's good talking to you. And congrats again to the Chiefs fans. You all deserved it. Y'all won it. I ain't going to lie. I was a little bit mad because I was a little bit mad because I was actually cheering for the Eagles, but credit is deserved where credit is due. I think that's what I want to say. Yeah, they earned it. They played a good game. So have a good night, everybody. I'll see you soon. Take care now. Peace.